Are there any hopes of improvement going forward? At least the guidance seemed to suggest so.
Indeed. So in Q1, the company reported a -2% growth. The Q2 guidance is -1 to +1%. Now, assuming the company meets the middle of the guidance, we're talking about zero growth, which means it's a 200 basis points improvement in Q2 versus Q1. And typically, Wipro meets the guidance. They've roughly, on an average, achieved the midpoint. So that points to Q2 being better than Q1 by about 200 basis points. Then the company said that given the large deal wins in the pipeline, they're confident that H2 is going to be better than H1. And they also said that when asked, that do you think FY26 will be better than FY25? He said, I think so. So it's possible, right? The second positive is, or which underpins this entire confidence, is the deal wins. Deal wins were very strong for the company. The deal wins came in at nearly $5 billion, $4.97 billion, up 24% quarter on quarter and up 50% on a year-on-year basis in constant currency terms. This also includes a lot of large deal wins. What the company said is that these deal wins, because they're in cost optimization or vendor consolidation, they're fiercely fought. They're competitive. So there is going to be pressure on pricing. There is going to be upfront investments which the company needs to make, but they are looking to offset that with operational rigor and excellence and all the levers that they have, and try and perhaps, in the past at least, they've spoken about maintaining margins in a tight band. They didn't say so this time, but we'll have to watch the way the margins go. But at least in terms of a top line, their priority is growth. Listen in to the management.
So there is this very strong deal momentum that we have had in Q1, which we trying to carry to Q2. Of course, some of these deals will take its own time before we start ramping up. Second half for us will definitely be better than the first half, especially because of the large deal bookings and the pipeline that we have at this point in time. What is very important for us to execute these large deals. And also the pipeline continues to stay strong for us. So that gives us the confidence that H2 will be better than H1.
For those deals to really translate into revenues, it will require upfront investments. There will be pressure on costs. That large deals typically come at lower margins, and there will be some pressures that we will have to offset. We will go back to that muscle of operational excellence that we will continue to drive. And those are the puts and takes on margins. We don't guide for margins, but we are happy with our performance in Q1, an 80 basis points improvement. And from there, we will take it. I think in Europe, we've had, for the last 4 quarters, we've not performed as well as we ought to have. It has been a combination of the macroeconomic environment, lower discretionary spends, but also certain client-specific issues that have played out. We believe we are very, very close to bottoming out. We have a large deal win that we have secured, and also some very good deals that we have also secured in Q1. Our pipeline is good, strong. So we are very, very hopeful of Europe bottoming out and coming back into performance starting second half.
We had given a wage hike last year in September. We haven't decided what's the plan now. We'll review it closer to the date based on the macro environment, demand situation, what's happening, and we'll take a call. So nothing, as soon as we decide, we'll let everybody know where we stand.
Okay, we'll slip into a break on that note. We'll come back and discuss what's buzzing in the commodity space. Manisha Gupta joins in on the other side.